Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the Catalyst Watch video. This is the most important video that I do all week. Right now, the Dow and the S&P 500 futures are up about 0.5%, but the NASDAQ right now in the pre-market futures is down nearly 2%. So let's hang on, investors, for this week. And this week, could we see some more cautious risk-off trading with the consumer price report arriving on Friday, just 5 days before the Federal Reserve policymakers meet to discuss inflation risks? Well, that could be. Analysts expect the headline CPI number to reach 6.7%, which would be the highest rate since 1982. So are we seeing inflation that high? Or is inflation going to come in a little bit softer? An even higher rate, though, could rattle investors further and risk central bank expectations. On the corporate calendar, big investor events focused on long-term targets are scheduled for Tyson Foods, ticker symbol TSN, CVS Health, CVS is the ticker, and Southwest Airlines, ticker symbol is LUV, LUV. Meanwhile, analysts in the electric vehicle sector will be put to the test on Rivian Automotive, ticker symbol RIVN, when the quiet period expires on December 6th. That means that analysts are now allowed to report whether they're upgrading, downgrading, putting an overweight or an underweight rating, and price targets, all for Rivian. That is expected to come out early on Monday and throughout the week. Now, Rivian shares are down more than 40% from their post-IPO high, but the market cap on the EV startup still sits at a lofty $96 billion. There are also some thoughts that the selling action on tech stocks and riskier assets could put some pressure on Tesla, TSLA, which is holding on to its $1,000 handle. This and much more on tonight's Catalyst Watch video. Now remember, Catalyst Watch drops every Sunday evening, so make sure you are subscribed to get the right information at the right time to make the best investment decisions. And support our research, analysis, technical breakdowns, plus get trade setups, buy-sell signals, advanced analysis, and so much more by clicking the first link in the description and become a Patreon member today. Okay, let's move right on to this week's catalyst. Options trading spiked higher for Lucid Group. Ticker symbol is LCID. Now I'm going to hop right over to our TradingView account here. There is a link in the description for a free account to TradingView. That's the platform that I love to use. And all the charts that you see today are on TradingView. So we got LCID for Lucid Group. So options spiking higher on Lucid this week. It means there's going to be extra selling pressure on Lucid. And you can see the past 4 sessions have been red for Lucid. They have finally come back down below their 21-day moving average, which isn't a bad thing. I mean, this stock skyrocketed and it went up really quick, and it was a very nice and very fun trade to be in. I would not be surprised if it does come back down to its 50-day moving average. Right now, that's at $35.80. So that's where the 50-day moving average sits right now. The other company that has a really high put call ratio is Hut 8 Mining. Ticker symbol is HUT, Hut. And this is a Bitcoin mining firm. They're actually one of my favorites out of all the different mining stocks. You can see they were in this very nice uptrend, but they do follow the path of Bitcoin. So if Bitcoin drop over the weekend, I wouldn't be surprised if on Monday this thing comes on down, and other blockchain related companies also drop substantially on Monday. So do be careful with those blockchain related stocks out there, it is going to be a bit of a bearish tilt this week on those stocks with Bitcoin dropping. Okay, Monday, December 6th. Here's what you need to know about. It's not too busy of a day, as there's not much coming out on Monday. It's going to be quite quiet. However, the developments around the Omicron variant will continue to be the main driver of market sentiment in the week ahead. And of course, this includes news flow together with hawkish turn by the Federal Reserve. Well, it means Friday's inflation data will be in the spotlight, and everybody will be thinking about it all week long. A broad-based market volatility, which saw Bitcoin tumble, and we're going to look at that in just a moment, on Saturday, looks set to remain elevated this week. Now, you can also expect ratings to start flowing in during the week in maybe the pre-market session on Monday, like I said, for Rivian, but also Hertz Global, ticker symbol HTZ. Their quiet period is what they call it, also expires. So you may see upgrades, downgrades, overweight, underweight, price targets all out for Hertz as well. Expensify is another one that their quiet period ends. Ticker symbol is EXFY. Let that load here for a second so you can see. Not much history here for them, but they did, of course, drop because they were a brand new company that hit the market on November the 10th. But yeah, we're going to see upgrades, downgrades, overweight, underweight, price targets, all for them as well. And the last one that I'm really watching is Backblaze. Ticker symbol is BLZE. They also will have analysts start to put out their price targets and buy, hold, sell, what have you. All their different ratings will come out for all of these stocks. Rivian, Expensify, Hertz Global, and then also Backblaze. Those are the ones that I'm watching to see what analysts are thinking on those companies. Now, also on Monday, we get Coupa. I think I'm saying that right. Coupa or Copa software, ticker symbol COUP. Let it load there on the chart for you. Now, they report their earnings on Monday, and you can see they are in a very defined downtrend right now. They've got a very defined upper layer for resistance and a bottom support level that they did break on Friday. So it'll be interesting to see what happens when their earnings come out. They are expected with an estimated EPS of 2 cents on revenue of $178 million. Coupa Holdings, if I'm saying that correctly, Coupa Software, has very high ratings, which gives me pause looking at the stock chart being oversold at the moment. The RSI is a 19.57. And remember, if it's 30 or below, that's oversold. So the stock's oversold. It has high ratings, and it comes out with earnings on Monday. Now, can they beat their earnings? That'll be interesting to see. So it's one that I'm watching, and it's one that I'm thinking about. It's on my mind. Okay. Now on to some emotional movements, and that's what I'm calling Bitcoin and Ethereum and all the other cryptocurrencies right now. Is it's really an emotional target here. BTC USD on the chart for Bitcoin. Now, here's what I'm thinking on Bitcoin. We were in a falling wedge pattern, okay? On Saturday, it broke right out of that. It dropped down to a low of 42,333. That is substantial. This was a big, big fall for Bitcoin. There must have been a lot of stop losses being triggered that just kept this thing falling, but it did have a nice bounce. If we measure from the bottom of the candle wick to the top of the candle for where it closed, it rebounded 16.19% within minutes. I mean, this thing fell as soon as midnight struck here on Eastern time. That's when Bitcoin fell. And for the next 27 minutes, it kept falling. And then finally, we had a nice rebound. And then there was just a soft, slow move up. But what is driving it right this second is a mentality. Bitcoin under $50,000 mentally signals this thing is weak, it's over, it's done, the bears are in control, it's crashing, let's get out of it. That's what people are thinking. But that's not what I'm thinking. I'm thinking to buy the dip, hold strong. These type of things happen. If you go back and look in history, and I know history does not represent what could happen in the future. I do understand that. But we can learn things from history. In other bull runs in Bitcoin, there have been 30, 34, 33% drops in the overall bull market run. So does this worry me? Yes, it does worry me. Does it scare me to sell out? No, it does not. Now, this $50,000 mark is very critical. If Bitcoin can get back above $50,000, then people will start feeling excitement. They will start feeling that Bitcoin is now strong, that Bitcoin can move, and it's a big mentality blocker that a lot of people have. And this emotion that you feel, it's okay, but you can't allow that to interfere with your investment thesis. If you believe that a certain asset is poised to do well, you've done your due diligence, you've done your research, and you feel good about it, and everything looks good, okay, you might have yourself a winner. But don't let that emotion, that feel good because you think your investment thesis is right, don't let that overcome what you're doing. Keep your rules in place and follow your rules step by step. And that $50,000 mark for Bitcoin, it is a big mental resistance line that Bitcoin will have to cross in order to regain, I don't know, some sort of overall feeling of joy, I guess, right? A positive feeling. Let's look at Ethereum. And when you look at Ethereum, ETHUSD on the chart, you're going to see it is completely different. Totally different structure. Look at Ethereum. Ethereum, if you take out the big candle wick, it looks like nothing really happened. On Ethereum, it looks like it's continuing to move sideways like it's been doing now for over a month. For over a month, Ethereum has been moving sideways. And this big candle right here, it was a big drop. Let's measure this right here real quick. Let's do this. So if we go from the bottom of the candle wick all the way to the bottom of the candle, because that's where it closed, that was a 15.24% rebound in Ethereum. And that rebound basically brought Ethereum right back to where it was. So Ethereum looks completely different than Bitcoin. And I think that Ethereum will outperform Bitcoin here in the short term, at least. But it's at 41.45 right now. It dipped below that 4,000 level, got as low as 35.75. But now it's back up above 4,000. And 4,000 is a big mental blocker there for a lot of people in Ethereum when they look at the price. So it's back above that. It's like, well, nothing happened. It's just right where it left off. So those are a couple things to keep in mind with Bitcoin and Ethereum. And two very important price points. Ethereum's 4,000 and Bitcoin right now, it's 50,000. It's got to get back above it. Okay, moving off of Bitcoin, Ethereum, and let's go to Tuesday, December 7th. Starting off with SoFi Technologies. Ticker symbol is its name, SOFI. Now, SoFi, it's a company that I love. I love this company. I think it's a great company. I think it's worth holding. Now, they could have added selling pressure on Tuesday because the redemption of public warrants expires. Now, this could provide a great buy the dip opportunity for SoFi because I believe long term in this company, and I personally buy the dip when I can on SoFi. We've been looking at this on the After Hours show almost every day last week, and it was just like, okay, is now a good time to buy? Sure, it looks like a good time to buy, and then it sells off more. Okay, is now a good time to buy? Yeah, okay, and then it sells off more. These growth stocks have gotten hurt the worst with all the fear in the market right now. And it looks like that fear is going to continue, especially in certain technology and growth stocks this week. So keep that on your radar. On Tuesday, there could be added selling pressure for SoFi. Okay, next one up is Vacasa. Its ticker symbol is VCSA. This is did I type that in wrong? This is a competitor to Airbnb, VCSA. Well, why? Okay. I guess then the ticker symbol is getting ready to be enacted for this one. But Vacasa, it's slated to begin trading after the SPAC deal with TPG Pay Solutions Corporation closes. Something to note here. The vacation rental management platform says that it is tracking, ahead of its latest Q4 revenue and EPS guidance with demand, very strong demand for Vacasa. Now, will Vacasa be a winner here? It is very close to Airbnb. It operates a little bit different, but it's similar to how it works with Airbnb. It's all vacation properties that they own. Now they own it, so that's a little bit different than Airbnb. Airbnb doesn't own their properties. So it'll be interesting for sure. Okay, moving off of Vacasa. So that ticker symbol will be live. It's just not live yet, but it will be live this week for Vacasa. Okay, moving off of Vacasa, we've got a couple of bigger companies to talk about. If I'm getting this right here, what's the next one? Let me check my notes here right quick. Okay, so Vacasa, we just talked about that, and its relation to Airbnb. Excuse me, being live. This is a section that I would have liked to have cut out, right, with the video. All right, on Tuesday, Monday.com. All right, for Monday.com, their IPO lockup expires on Tuesday. Their ticker symbol is MNDY, Monday.com. It's been a pretty talked about stock, especially on TV and so forth. But here's how it's been performing. Of course, it sold off on Friday, Thursday, Wednesday of last week with the fear in the market. Now, Monday.com, on Tuesday, it will have added selling pressure because of this. So just keep that in mind on Monday.com. Okay, moving off of that, let's get going again. Morgan Stanley is having or hosting a space summit, and it starts on Tuesday, and it's going to throw the spotlight back on the growing space sector again. Now, ahead of the summit, Morgan Stanley says it is clear that commercial and government entities alike see first key mover advantages in space and are racing to establish their positions. Now, could we have a new space race on our hands that don't just include the governments of the world, but include private sectors of the world as well? Hey, Devin, how's it going? Wouldn't most warrant holders have sold already? it is possible they could have, and these would be the leftover warrant holders that have not already sold. Some of them just let it transfer over to stock anyways, but it just could provide some selling pressure and just something to watch out for. It may not amount to anything for SoFi, but it could, and that's just why I'm bringing it up, just as a possibility. Okay, presenters at the Morgan Stanley space deal include ATS Space Mobile, and their ticker symbol is ASTS, Black Sky Technologies, BKSY, Maxar Technologies, MAXR, Momentous, MNTS, Palantir. Now, I find this interesting that Palantir is included in this with all these other space companies, and it has to do with these satellites, right? Satellites are a part of space. It's not just SpaceX or Blue Origin with their big rockets and launching people off into space. It is every aspect of the space community. So I find it interesting that Palantir is included. We also have Palantir, PLTR, the ticker symbol. Redwire is included, RDW, Spire Global, SPIR, Viasat, VSAT, and of course, Virgin Galactic will also be speaking, SPSC, and Virgin Orbit will also be included. Now, expect Blue Origin and SpaceX to also get some attention too during this conference. Last year, many space stocks rallied after analysts started coverage that trailed shortly after the conference, and the Procure Space ETF, ticker symbol UFO, that generated a lot of buzz last year. This year, we also have the ARK Invest Space Exploration and Innovation ETF, ticker symbol ARKX. So keep your eye on your favorite space-related stock or ETF this week with the conference going on and all of these different space companies presenting. You can always pick up a nugget or two whenever executives talk about their company, because that's what they love to do. And you can always get nuggets from that. Okay, another company that is set to move is AutoZone. Now, the last time we brought AZO is the ticker symbol. The last time we talked about auto parts, I missed it. And I got to be upfront and transparent about that. I missed it. Now, for AutoZone, look at where it's at right now in this trading channel. Okay. You can see a very defined trading channel for the majority of this year. This went back, it touched its bottom, and it started in this trading channel back in March. The 2nd of March is when this channel started. And it is very defined for AutoZone. And if we go back to the very first vertical line to your left, that would have been earnings back in March. Not much happened, but then it rallied to the top, it stayed along the top, and then we get to earnings where they missed, kind of flat, really. They really didn't miss. It was just kind of in line, I guess is the correct term to use. So it sold off to the bottom, rallied, sold off, rallied. You can see the pattern here, and right now it came down. It bounced off of its 50-day moving average, which is bullish, right? Whenever a company is above the 50-day moving average, that's a positive or bullish sign. If it's below that 50-day moving average, it's a negative or bearish sign. So seeing it come down and bounce off of the 50-day moving average, and on Friday, when there was so much red and pain in the market, they were only down 0.2%, nearly flat. So I think that their earnings should produce something positive for the company. Right now, they're looking to extend a streak. And if we talk about this, out of the 12 past EPS for earnings for AutoZone. They are on a 12 streak, a 12 win streak on EPS, earnings per share. The last 12 they have beat. If we go back to the one in May, they beat on EPS, but they were more in line on revenue. Okay. Now, options, the option market can always indicate that something is going to happen, especially when the implied volatility and other factors are indicating a move for the stock. For AutoZone right now, the options market implies a move up or down of 6%. Now, if we measure where it is right now to the top of its channel, I got to scoot that over there so I could see. The top of its channel, that's about a 4% move right now. So if I extended this purple line out right here, from where it is right now up to that line, that's about a 4.5% move. Could that be the 6% move that the options market is not predicting, but heavily tilting towards? Or is it a 6% to the downside? And if we measure from here and we just go down, the 50-day moving average is about 3.4% down. If we go down to the bottom of the channel that it's in, that's about an 8.2% move. So there is definitely going to be some movement here. I think it's going to be to the upside, but there's no guarantees. Also, watch supplier motor car parts. I almost said that wrong. Motor car parts. The ticker symbol is MPAA. And the reason I bring them up is because they generate 40% of their revenue from AutoZone. So when AutoZone reports on Tuesday, and if that's a good report, then that could also move motor car parts. Now, motor car parts moves with AutoZone 75% of the time in the week following earnings. I find that very interesting. All right, so let's go back here to AutoZone's chart. See some comments here. Rivian, I'm extremely bullish. Good. Yeah, everyone is entitled to their opinion. Rivian first price analysis is strong buy at 130. Tomorrow it may. How are the options looking for Zscaler and Facebook? All right, I'll look into that in just a moment. Rivian, though, with those analyst price targets coming out and their expectations I talked about at the very beginning of this, that can be very good for Rivian. As long as they continue to come in and be positive. I think many will for the most part. The price target, though, I'm not sure where the majority of them are going to end up landing. You know that I have Rivian. Let me just go here real quick. RIVN. I've got that $100 and below as like a place to buy for Rivian. But I also have this channel, and I've had it since the beginning, of around $120 to $125 a share. I think that could be a good landing place or maybe even a price target for Rivian in the short term. But again, $100 or less, that's going to be a very fine line there at $100. And let me just go ahead and, while we're talking about it, I'm going to place a line here at $100. And I'm going to change that color so we know when we see it. I'm going to change it to red because that's like a barrier that we don't want to see it drop below. Or if it does, bounce right back up. You can see on Friday, it actually came down to just under or right at $100 per share. So that's interesting. All right, back to AutoZone right quick. Now, for AutoZone here, let me fix the chart. Here we go. All right. So for AutoZone, their estimated EPS is And this blew me out of the water when I looked it up. EPS of $21.08 a share. That's a high one, $21.08 a share, with revenue of $3.38 billion. Now, analysts do have price targets between $31 and $46 a share right now. And, well, wait, I said that? Hold on. My apologies. I said that wrong. 1,865. That would be the low side, 1,865. And the high side would be $2,050. That's the price targets right there. So it is just about to hit that lower price target, which again, to me, man, it just really signals that maybe this thing is going up. But I have it in the back of my mind, I got the last auto parts store wrong on their earnings. So that's kind of making me feel a little bit cautious on this one. Okay, another company on Tuesday, we've got Coinbase, ticker symbol COIN. Now, they're doing a lot of conferences, a lot of speaking, so you can always expect to pick up something from that. But of course, they've been falling too, and I imagine when the markets open on Monday, they're going to go down a little bit too because of Bitcoin's fall. So Coinbase is participating in a fireside chat at Goldman Sachs, and this is for the U.S. Financial Services Conference. Now, what I love about these, and SoFi executive had one last week, and just going through and reading the transcript, you can always pick up a nugget or two about the company that you can add to your investment thesis. That's why I think they're interesting, because you can always learn something when an executive at a company speaks. Okay, another company that I think is set to move is Builders First Source. Ticker symbol is BLDR. Builders First Source. Okay, they host an Investor Day presentation with a detailed overview of the company's core business, drivers, and strategic vision, as well as initiatives related to innovation, operational excellence, and capital allocation and sustainability. Shareholders could get rewarded here. Usually when a company comes out and starts talking about the future, that's when investors get all excited, right? And then that's when they go and start buying more shares. So I expect that for Builders First Source, when they start talking about their future, it's going to be interesting. Okay, another company that I have purchased and I'm waiting for takeoff, and that is with Seven Oaks Acquisition. Ticker symbol is SVOK. SVOK. Now, they are going to vote. I know this stock chart looks horrible, doesn't it? If we go like this, it doesn't look as bad, but it still does. This was offered at $10.50. That's what it came on the market as. It is now dropped Friday and Thursday of last week. It is now down to $8.78. Now, they vote on the SPAC deal to take online grocery retailer Boxed public in a deal that will value the company at about $900 million. Now, the stock right now at $8.78 has a market cap right now of, you can see it on the right bottom of your screen. It's really small though. Over here in this area right here, that's where the market cap is. $284 million. That's the market cap. So this company is coming onto the market $900 million. but the current market cap is only $284 million. So it's trading under $8. Somehow that's going to have to be adjusted, right? Either investors are going to have to come in and buy shares, or the valuation for the company won't be $900 million. It'll be lower than that. So this is a company that I have bought, I own it for a while. I expect Box to do good things. I've done my research, my investment thesis on the company, and Box sells a subscription service. And if you've been watching this channel for a while, you know that I love companies with recurring revenue. I just love it because you can count on that for the most part. And it helps with quarterly after quarterly after quarterly when the revenues just tick up and tick up and tick up. It's really easy to calculate, and it's really easy to come up with a formula to decide how the company is going to perform. But moving on, Box sells bulk items through an automated facility that competes with Costco, BJ's Wholesalers, and Walmart's Sam's Club. So think of those big box stores like Costco, right? And Costco is one of my favorite stocks too. I own Costco. I treat that right now as a defensive play. That stock, Costco. And Box is like that big box store, except you just tap on your app. I mean, I know you can do it with Walmart and so forth, and Target, but you're doing this like at a Costco level type of store where you're on your mobile phone and you just type in, okay, I want a big bag of cereal this month. How about a big bag of rice? Yeah, some pizza pockets. Who knows? So some spaghetti, and just or some meat, some veggies, what have you. And then it's shipped to your door. People don't have to go to the big box store, Costco, and lug that stuff, carry it all around, get it in your car, then carry it to your house. No. I think Box simplifies that whole ordeal. And I think it's a company that can compete. Now, Box is also expanding when it's right now into fresh items. So you got your fruits and vegetables and on-demand grocery delivery with an acquisition that it made in New York. And that company was called Max Delivery. So I like Box. Of course, it looks like nothing on the screen right now, but they are voting. I do expect the vote to go through with the SPAC deal. So that's just one just to keep on your radar. I think it looks good for the future, something to buy and hold, not something to trade around. Okay, now for those of you who like QuantumScape, ticker symbol is QS for QuantumScape. I've got a special one here for you. All right. QuantumScape, it had that great big old run up like everything else did back in December and January of last year, but it has since fallen off. It's down to 24.55, right? Okay. If you like QuantumScape, but are looking for a company in the exact same space that does the exact same thing with a, let's call it a lighter valuation, then listen to this. Shareholders with, this is a long name, Decarbonization Plus Acquisition Corporation 3. Ticker symbol is DCRC. They meet to vote on a SPAC deal with Solid Power at a valuation of $1.2 billion, which is quite lighter than QuantumScape's $10+ billion market cap. Now, Solid Power operates in the same electric vehicle solid state battery space as QuantumScape. And that's why I'm mentioning them. Many investors who feel like they missed out on QuantumScape's big run we'll be taking a closer look at Solid Power to not miss out on this one. Although I will note that last week, the market took a risk-off approach, which led to a market sell-off. This could put a damper on the stock for now. All right. So just keep that on your mind. I thought it was interesting. A cool company coming to the market. Don't have a stock chart for them yet, but it's cool. I like them. Dig into that company, Solid Power. It's pretty cool. All right, moving on. Another company, Toll Brothers, ticker symbol TOL. With the housing market the way it is right now, it's starting to contract a little bit. We're also in a seasonal change in the housing market where housing sales do slow down anyways during the winter months here. So that could affect Toll Brothers. But you can see they have been just going up and to the right on the chart. They slowed down during the summertime. Let's see, they're up 57% year to date right now. So not a huge gain, but they are up. And right now, they are out of the trading channel that they've been in. And every time they've come out of this trading channel, you can see it with the two that I have right here in front of me. Hold on. There we go. Right here. There we go. I'll change the color so it doesn't blend in so much. How about we go with a hot pink or something? All right. Oh, that looks too much like a red. How about just purple? Okay, so that pop out right there, as soon as it gets up and out of the trading channel, it comes right back down, right? Okay, it did the exact same thing over here where it came out, and as soon as it did, it actually came down and back tested it and popped up, and whoa, maybe this thing's going to go ahead and move higher, but no, it fell back down. So right now, it is out of its trading channel, which to me might say, hold on, Toll Brothers. I know the housing market is looking really good. I know it's starting to slow down and contract a little bit right now. But one thing to note, the 3 times or the 2 times that it popped out of the trading channel were also with earnings. So I'm thinking that right now, Toll Brothers, their earnings are priced in. Toll Brothers has popped 13.8% and 12.9% on their last 2 earnings reports. So can they pull off a third? I don't think so. I almost think that it's priced in. Their earnings are priced in already. Now, I'm not always right. I admit that. And I call myself out when I'm wrong. But that's what I'm thinking here with Toll Brothers. Either way, Toll Brothers does have an estimated EPS of $2.50 a share with revenue of $2.91 billion. And analysts do have a price target of between $71 and $86. And right now it's at 68, so it's not quite to the bottom of that price target of 71. So it's getting there, but not quite. But anyways, Toll Brothers, I think, is a strong company. It's in the housing market. It builds homes. Even though new home starts have been declining a little bit. I think it's priced in, so just keep that in mind. All right, on to a company that I think you need to stay away from. Stitch Fix. Ticker symbol is SFIX is the ticker symbol. Now, they're an online personalized styling service. They use data science to predict the clothing styles that might look best on you. They've got a little app that you can play around with and pretend you're dressed in different clothing. Okay. They report their earnings. They have an estimated EPS at a loss of 14 cents a share with revenue of $570 million. Now, analysts do have a price target between $46 to $70 a share. Now, I get a stay away warning on this one. And so far, each warning has worked out and saved investors major losses. So keep that in mind. If you look here, I've got the last 3 earnings. It's where the vertical lines are. I have an oval where the earnings are, and they are a gap down, a gap up, and a smaller gap up. So 2 of the 3 earnings, the price did gap up. One of them, it did gap down, and that's when they were coming from some really high valuations. Now, they've been in this descending trading channel now for a couple earnings. This will be the 3rd earning in a row that they're in that channel. They're kind of right in the midway of it, where they could either continue down or they could somehow possibly gap up. But I am getting a warning to stay away from this one. I do find it interesting that they were up 1% on Friday when the rest of the market was going down. Did investors just forget about Stitch Fix, or what? I don't know. But just cautious. I got a warning to stay away on this one. All right, let's move to Dave & Buster's. They also report. Tuesday is a very busy day. There are a lot of moving parts on Tuesday. Dave & Buster's ticker symbol is PLAY, PLAY. If you ever been to a Dave & Buster's, it's pretty fun. It's pretty neat to go there. It's like a grown-up version of Chuck E. Cheese or something like that. So anyways, Dave & Buster's, they report their earnings. Now, Dave & Buster's has dropped every earnings this year. If you go back, I have a vertical line here on every earnings, and every single one for the past 3 this year, they've gone down. The last earnings, let's line it up here. They dropped, what is this? Let me just measure it. Can't quite see. All right, from there up that high. They dropped 20.4% on their last earnings. That's incredible. So be careful with this one. Will this earnings do the same or be different? I'm not sure. I do think so. I do think that Dave & Buster's, they have an earnings estimate, an EPS of 13 cents, and revenue of $319.7 million. I'm not sure where this one is going, because this is like this is a restaurant, right? You go there to eat and you go there to play games. It's not very COVID friendly. And if we get lockdowns or more restrictions, well, that's not going to be good for Dave & Buster Entertainment. It's not going to be good for their place, and it's not going to do anything good for their earnings. Now, what's interesting about Dave & Buster's is it may have been punished by investors looking to capitalize on losses for tax purposes. Yes, you heard me right. Given the uncertainties around the new COVID variant, for Dave & Buster's, it's difficult to pick, right? To pick either the market went down or people were selling to get those realized losses so they could balance out their taxes. It's hard to say which one is going on. So, I don't know. The underperformance, it could be attributed to a tax loss selling or a rapid change in investor perception around the economic reopenings in 2022. Maybe. Other companies that could also be included in a, let's cut the losses. Let's take a realized loss to counter what we owe on our taxes. PayPal could be one of those. Cheesecake Factory. Well, PayPal, PYPL, the ticker. Cheesecake Factory, ticker symbol is cake, CAKE. You also have Duck Creek Technology, ticker symbol is DCT. You also have Bloomin' Brands, ticker symbol is BLMN. Those companies could all be taking a beating because people are taking the losses to write off on their taxes. It's a possibility. And if they are doing that, then that presents buying opportunities because those companies will ultimately look at PayPal, PYPL. This thing has just fallen. $183. We've been talking about this one a lot in the daily live streams. We thought, yeah, $200, that looked like a pretty strong support level, and then it falls below it. This could very well be people taking a loss on the stock to offset their taxes. It's possible, right? And if so, I believe PayPal especially is definitely a buy the dip. Cheesecake, man, that is a, let's go, cake is a ticker symbol. Cheesecake, that's one that when things do start to reopen, yeah, the stock will definitely move. It's not going to move right now. But, I mean, look at this. You find this interesting. Friday, when all the pain was in the market, right? How are they up 0.2% and not down 5%? So these things are interesting. All right, moving off that, let's go to ChargePoint. CHPT. I love ChargePoint. I own ChargePoint. I've traded ChargePoint. This one is pretty cool. So here we go with ChargePoint. It has been selling off pretty rapidly. There we go. Nice view there of the chart. It's been selling off pretty rapidly. It was down 7.39% on Friday. Now, ChargePoint does report earnings, and this is a highly anticipated report for ChargePoint. Last quarter, ChargePoint jumped 7% after guidance was updated in the earnings release, and the conference call pleased investors. They liked what they heard. Also, options trading implies a move of around 8% this time. Could that be to the upside, or is this coming back down? That's a tricky one. It's a tough question. I think long-term, ChargePoint has got a real chance of being a pillar, a cornerstone in your portfolio. Now, ChargePoint has an estimated EPS at a loss of 13 cents with revenue of $63 million. Now, analysts do have price targets between 31 on the low side and 46 on the upper side. It's sitting at 21.57. It's nowhere near those. Now, when it was up here at the top of this rally, it was getting close. It was getting really close. It got up to a high of $28 at one point there. But remember, on ChargePoint, Congress leaves December 10th, and EV chargers like ChargePoint would benefit from the Build Back Better bill if it got passed. Can Congress do it and get it through? I don't know. I have no idea. I'm actually leaning towards doubtful. But I do believe ChargePoint is viewed as a barometer for EV charging. And investors look to it first for exposure to the sector, given its scale, its global reach, and being a leader in the industry. Its software creates a strong software as a service revenue stream too. As EVs increase, software and cloud services will become more important to manage charging complexities. ChargePoint has a first mover advantage in EV charging and a strong market position. And get this, I didn't know this until I did a little digging on ChargePoint. But ChargePoint has right now over 70% market share in the US for level 2 charging. For me, this is a buy the dip and hold for many years to come. Absolutely. How's it going, Mario? Glad to see you. Glad to see each and every one of you here. I do appreciate that. Sorry, I look off screen. I look at the chat. It's over here to my left side, so I think I'm talking to you when I look over there to the left. Silly me. All right, so that's ChargePoint. Now we're going to Wednesday, November 8th. Now, the House Financial Services, the committee holds a hearing about digital assets and the future of finance. Witnesses for the hearing include Circle's CEO, FTX's CEO, Bitfury CEO, Stellar Development Foundation CEO, and Coinbase's CFO. The session is titled Digital Assets and the Future of Finance, Understanding the Challenges and Benefits of Finance Innovation in the United States. This could move the crypto market and blockchain-related stocks. So keep that on your radar. That's for Wednesday. I'm sure there'll be a lot of news clips of the CEOs from those different companies on the news that evening. All right. IPO lockups do expire for Splash Beverage Group. Ticker symbol is SBEV. Splash Beverage Group. Now, with the lockup expiring, definitely expect more selling pressure added for them on Wednesday. And they were down 13.1% on Friday. This thing is liable to dip down to under $1 with selling pressure coming for it. So just maybe stay away if you are in it. Okay. The retail sector could see some earnings report trade in some wild ways in the after hours on Wednesday. First up, we've got Torrid Holdings. Ticker symbol is CURV. They report earnings with an estimated EPS of 22 cents on revenue of $311 million. Now, the options market has or implies a 21% move up or down. So this could be a real wild ride when they report their earnings. Now, on their last earnings, this is only their second earnings as a publicly traded company. On their last earnings, let me open this up a little bit here. Last earnings, this thing jumped. Let's see how high did it go. It jumped 35% on its earnings last time. 35%. So this could be a great PEG strategy, power earnings gap strategy, to use on their earnings. That 30+% move, that was crazy. And right now, options market is saying 21% move. Looking at last earnings, I might believe that. Okay, they were up 4.3% on Friday when the market was red. All right, another company that has earnings and some wild options going on is Rent the Runway. ticker symbol is RENT. Now, Rent the Runway, it's a company that you can rent fashionable items, okay? They started to form a little trading channel here, but it's really too early to put anything on the company, kind of like Rivian. The chart, it is what it is. There's not really anything there to see. They were down 3.5% on Friday. They're at $12.13. Now, they post their first earnings as a public company. And your first earnings as a public company, that's one of your most important earnings of the entire life of your company. You want it to be as good and shiny and polished as possible. And investors, well, we can learn all kinds of things off of a first earnings report. So it'll be interesting to see. This is a different company. Millennials really like this company. It seems to be their go-to base. You don't have to buy, you're going to some fancy party. You don't have to go buy a $200, $300 dress where you're going to wear it one time. You just rent it from Rent the Runway, wear it, and then return it, and it doesn't cost you nearly as much. But the options market implies a 17% move for Rent the Runway. 17% move. Either way, up or down. If it was a 17% move up and it's their first earnings, it very well could be. If we go to where they closed on Friday, just to get back to that channel is a 25% move, okay? It would have to go up 25% just to get into the bottom of this trading channel that they started to form right back here. So I don't know. I don't know which way this one's going to go. With the way the market is, with how things were reopening into this new variant, it could have meant good sales for Rent the Runway because things were starting to open again. It really sucks, though, for them with the new variant and lockdowns potentially coming and restrictions coming, because they could have had a really good Christmas season with people starting to, have their Christmas parties again and so forth at work. So we'll have to see how it turns out and how they did. All right, I know everyone's wondering, GameStop, right? Ticker symbol GME. They have their earnings also. Is it going to be good? It's going to be bad. Quite frankly, I don't know if it really matters. GameStop, well, as we all know, it can move however it wants to, right? It has days where it just completely bucks the market and goes its own way. Now, it's been in this trading range, this channel here, moving sideways since June, actually a little bit before June. We have to go back. How far do we have to go back? We really have to go back here to March to get this channel and how long it's been in there. But it's getting to the bottom of that channel. It was down 5% on Friday. They've been range bound here between the two. Now they have an estimated EPS of a loss of 52 cents a share with revenue of $1.19 billion. Now, you can tell analysts don't like this stock too much because they have price targets between $24 and $88 a share. This stock is nowhere near those price targets. Now, this stock can move without warning. So, as always, just be careful if you are trading GameStop. Now, in the options market, they are implying a 16% swing on GameStop, up or down. I would imagine it would be more to the upside since it is getting close to the bottom of its channel, but it has also just recently ducked below its 200-day moving average. And that's also a very negative sign. You don't want to be that low, right? You don't want that 200-day moving average to catch up to your stock ever. You want to stay above that best as you can. So that's GameStop. Just be careful. But there are options saying that it could move. All right. The next company that I want to talk about that I don't think it's talked about nearly enough, that's Thor Industry. Yep. Thor, like from the MCU, Thor. Ticker symbol is THO. Thor Industries, they build RVs, recreational vehicles. You want to go take a trip to Mount Rushmore, or you want to go to the Grand Canyons and you want to travel in a recreational vehicle, well, you might be traveling in a Thor Industries RV. It's very possible. Now, here on their chart, uh, they've been range bound here recently, going back to May of this year. Really just bouncing around, moving sideways. Now, Thor weighs in on Wednesday with an earnings estimated EPS of $3.19 with revenue of $3.46 billion. Now, I like the boating and the RV markets. They were already in an uptrend before the pandemic started. And then once we had lockdowns and stay-at-home orders, that meant people couldn't spend their money on vacations. So what did they do? Well, they upgraded their homes. They bought RVs and they bought boats. The RV and the boating market are on fire right now, and they've been on fire. And I believe investors are really missing it on these. Otherwise, the stocks would be moving in a more upward direction, not necessarily sideways. But what I think analysts are saying that, well, it's probably going to start the sale of RVs, the sale of boats. Well, it's probably going to start slowing down now. No, it's not. It's not at all. So Thor has had 6 upward revisions for their earnings, right? For the upcoming earnings. And they have had 0 downward revisions. That means that things are better than what they predicted it would be. And each time what they come out with a revision to raise their estimates, that is a positive. With estimates up 30% in the last 3 months alone, that is really good. So Thor gets an A+ EPS revisions grade. And as I said, RV demand is hot right now, and so are boats. And that's expected to stay strong through 2022. So keep Thor on your radar. RV manufacturer. If you want to go for a RV retailer who are selling the RVs, then you can go to Camping World. They sell a big variety, like Winnebago as well. That's another one to watch as well. Winnebago. They sell a bunch of different RVs. If you want to go to a boating manufacturer, you can look at Brunswick. And if you want a boating retailer, you can go to Marine Max. Those are the best ones out of the bunch. All right, Thursday, December 9th. We've got CVS. And I'll pull that chart up here. CVS, ticker symbol is their name there. CVS is doing something that I think is really going to move CVS in a positive way. And you can see on the chart here, all year long. This is 2021 on your chart. That's what you see right here, 2021. It's been moving really nice. It kind of flattened out over the summer, but all in all, for the year, it's been doing pretty good. Now, the reason I'm bringing it up is CVS, they have their Investor Day preview. The first Investor Day event in more than 2 years for CVS Health. CVS is expected to feature updates to their fiscal year 2022 guidance and more color on the company's long-term growth targets. Bank of America thinks the event will lean heavily into the healthcare evolution of the entire CVS Health enterprise, building on the various investments and strategic priorities that have been unveiled since the original merger and pushing forward into a broader healthcare services entity going forward. So keep CVS on your radar for announcements that'll be positive about the future growth and the path that the company is going to take. And I'm thinking it's more healthcare related services. They're expanding their market, which would be expanding their TAM, total addressable market. All right, another company that's doing something similar but in a different industry is Tyson Foods. Yes, all the chicken wings and chicken tenders to your heart's desire. Tyson Foods. They are holding a virtual Investor Day event. Now, the management team will provide insights on company strategy and updated midterm financial targets. Shares of Tyson gained 2% the last time the company held its Investor Day and were 14% higher 3 months later. So also with Tyson's Food, keep an eye on Beyond Meat. Ticker symbol is BYND. Now, Tyson's Food, Beyond Meat, completely different, right? One is plant-based, Beyond Meat, plant-based foods here. And Tyson's, well, you got your chicken wings. That's not organic or veggie in any way. Well, the reason I say watch Beyond Meat as well is not for a positive, it's for a negative. Beyond Meat fell 3% during the last Tyson Investor Day event after plant-based initiatives were discussed and brought out by Tyson's Food. So when a big corporation, comes out with a new product that a smaller company is developing or already has on the market, yeah, that can hurt the little guy. So yeah, be careful with Beyond Meat when Tyson's talks. That's it. Okay, we've got 4 earnings of interest, and I want to go rapid fire with these because the video is getting long now. We've got Broadcom. They're coming out. I think they're going to do pretty good. Ticker symbol is AVGO. AVGO. Broadcom. Look at the chart. It's been doing pretty good. It kind of slowed down during the summer months, but it's been doing good. Now they have an estimated EPS of $7.77 and revenue of $7.36 billion. I think they're going to do really well. The one thing I would point out is I'm a little concerned that maybe this earnings is already priced in. That would be my one concern because they had a beautiful October rally and even November rally all the way to November 22nd before they started coming back down. But they only came down to flirt around with the 21-day moving average. So that's not really that far of a fall when you're talking about the moving averages anyway. So just be careful. I know they're going to do good, but it may already be priced in. I mean, look, they were up 1% on Friday when the market was red, right? All right, next up is Chewy. Ticker symbol is CHWY. Chewy, they're like an online pet store where you can get pet food and so forth. They have an estimated EPS at a loss of 4 cents with revenue of $2.21 billion. Now, look at the stock chart here for Chewy, and it looks kind of interesting. We can see that there is definitely a top resistance line that it just doesn't break through. Now, since their last earnings, and they fell on their last earnings because they missed, let's see, how much did they miss by here? They missed by 154% on EPS, and then they were in line and flat with revenue. So they had the money, they just weren't profitable with that money. So a big gap down here for that earnings. Their earnings prior, it was priced in. They sold off after earnings. Here, they had a big bounce on earnings, and then they sold off almost immediately after earnings there. So be careful with this one. But what's interesting is it is forming a descending triangle. That's where the bottom support line is flat and the top resistance line is in a downtrend. So that's why we have this certain setup here. Now, this could be pushing the stock to potentially make a reversal, but I don't know. I'm not really sure if the company's got everything in line yet to really be a winner on earnings. But it's one I'm watching. I'm not investing in, I'm not trading on this one, but I'm watching to see how it reacts, to see how investors play around with this one. All right, next up is Costco. This is I have big beliefs here in Costco. Hold Costco for the long term. It's been in a trading channel since March. It fell out of it right here in that October, September time frame right here, but then it had a beautiful October rally. They popped out of it and then they came back down, right? When they were out up here, they totally overdid it. Totally overdid it. Needed a correction to come back down in this channel. Now, with stocks, you see that all the time, right? When they have a big run up, they also have a big fall. That's why you want to see, like, look at the middle of this trading channel. It's just nice and steady movements. You know, it's like not even a percent, 1.4%, less than a percent, 1.8%, less than a percent, less than a percent, 0.5%, 0.2%. That's what you want to see. That nice, slow and steady movement up and to the right. That's really healthy. And that's what Costco's been doing, except for lately, of course. But I do think this is a great company. I was concerned earnings were priced in when it was popped above its trading channel. Now I'm leaning more towards they might have a good earnings, and I expect they will have a good earnings. But the one thing that is got me here is they're at the top of their trading channel, right? So if they have good earnings, it may be a sell the news type of deal, right? Like what happened with Target. I know I keep beating myself up over that one. But Costco has an estimated EPS of $2.63 and revenue of $49.45 billion. So they make a lot of money. And this is a cornerstone in my portfolio. I love it. I love the dividend that they pay out too. So it's just a winner all around. All right, another one, rapid fire. I know I want to go rapid fire and quick with this. Lululemon. I really think they're going to do good. LULU for the ticker symbol. I think they're going to come in pretty good. Now, they are at the bottom of their trading channel, bouncing off that 50-day moving average, which is a positive, right? They have an estimated EPS of $1.40 on revenue of $1.44 billion. So I really think this one's going to come in, and I think it's going to bounce off that 50-day moving average, bounce off the bottom of the trading channel, and start moving upwards. I really do. I think people are, when they're going back out to the gym, specifically the gym, they want to make sure that they don't have holes in their britches or what have you, and they want to look good for going to the gym just to sweat and exercise, right? Oh, man. It's funny sometimes. Okay, another company that we have to watch this week because there was big news, big negative news last week. Nvidia, ticker symbol NVDA. I put Nvidia on the list this week because it looks to be one of the more interesting presenters at a virtual auto tech conference. It will be one of the first public appearances by the company since the U.S. Federal Trade Commission sued to block Nvidia's planned $40 billion purchase of ARM Holdings. I'm really curious to see if executives come out and say anything about the deal, whether they feel confident about the deal, whether they feel like, oh, this is a big hit to the deal. I want to try and see and pick up on any cues that they may be giving. I know with lawyers involved, they probably aren't allowed to say much, but it'll just be interesting to listen, read the transcript if I have time, whichever way, and see what is said. So that one will be interesting. Nvidia about the ARM deal. Okay, moving on to Friday. This is December 10th. This is the big day for inflation. Friday. It could be a red, super red day in the market if inflation comes in hot. Thursday might be a calmer, cooler day. Might be one of the best average day out there, because investors aren't going to be sure which way to go on inflation numbers, right? So the highlight that we've been talking about for the economic calendar will be Friday's arrival of the November's Consumer Price Index on inflation data. The US CPI accelerated to 6.2% in October, the fastest annual increase in over 30 years, amid a global supply chain crunch, a big old mess up, a big old pile of shipping containers not getting to where they need to go. Now, it's forecasted to rise to 6.7% in November. That's what the estimates are, 6.7%, which would be the highest rate since 1982. An even higher rate could really rattle investors further and just totally underpin expectations for faster tapering by the Federal Reserve. That's the fear. If inflation comes in hotter than expected, then what's the Fed going to do? And is it going to be an overreaction like we saw 2 Fridays ago, when we had a real big overreaction in the market, and then on Monday things just popped and came back up? So that'll be real interesting to see. All right, this video has gotten really long-winded. I didn't expect it to be this long, and I guess I should say that's what I'm watching this week. What are you watching this week? I'd like to know as well, as always. And remember, your comments really do make these videos so much better. So leave your thoughts, good or bad, whatever you're thinking, it's fine. We don't learn without communication, right? Now, if you found this video helpful, informative, actionable, then click the link in the description, the very first link in the description. But first, before you do that, click the like button on this video. Click the like button. It takes a few seconds and you can do it. And it helps out. It really does. The second thing that you can do is share this video. Go ahead and get the URL for this video and share it with your friends and family. Share it on your social media accounts. That really, really helps as well. And then, of course, the first link in the description, that helps to support our research. And the research for this video was 2 days long. That's how long it took me for this 1 hour and 24-minute video right now. It took me 2 days of research for this video. Research is the big time consumer, as you know, because you do your own due diligence, right? You might hear something interesting from this video and then you go look it up. It takes time to research. So clicking the first link in the description helps to support our research. It helps to support our analysis, technical breakdowns, but it also gives you trade setups, buy sell signals for Bitcoin, Ethereum, stocks, and trade setups, trade ideas. It also gives advanced analysis on different topics. So it's really cool. So it's a way to help us to support the work that we're doing, and it's a way to help you on your investor's journey. So all it is financial freedom for all of us. That's it. That's all it is. Okay, I'm going to wrap this video up. I see your question about options for Facebook, was it? Yeah, Zscaler and Facebook. I will look those up. I will post them on Twitter so you can see them there, so that way I don't take up more time in this video. The Twitter account is Ticker Time News. That's it. It's at Ticker Time News. That's the handle. I'll post what the options look like for Zscaler and Facebook shortly after I end this video. So with that said, I want to thank everyone for being here. I greatly appreciate it. Remember, this is the most important video I do all week. So if you are just coming in late on the video, make sure to go back to the beginning of the video, restart it, and watch it from the beginning. There is a ton of information in this video. And of course, we are live every day the market is open around 5 p.m. Eastern to talk about what happened in the market that day, to talk about different stocks or crypto, but most importantly, to answer your questions. So if you have a question, join me for the live stream every day. The market is open around 5 p.m. and we'll be there for a nice conversation. All right, ladies and gentlemen, thank you for joining me on this Sunday edition of the Catalyst Watch video. I hope you have a wonderful rest of your weekend, and I will see you in the next video.